Welcome back to DINAR Community, the global hub for serious holders of IQD, VND, ZWL, and other exotic currencies who believe in being ready, not reckless. Picture this. You step into a bank, nerves high, holding tightly onto your well-kept Iraqi dinar notes. You're hopeful, maybe even certain, that today is the day. But then the teller looks at you and says, "We're sorry. These can't be accepted." For many investors in 2025, this situation has become an all too common and emotionally jarring experience. But here's the key: rejection at the bank counter doesn't mean your investment has failed. On the contrary, it could be the most crucial turning point in your financial strategy. Why are banks saying no? The financial world is evolving rapidly. A combination of sweeping reforms, heightened regulatory measures, and advanced technologies is reshaping how currencies, especially exotic ones, are handled by global institutions. Whether you're holding Iraqi dinar IQD, Vietnamese dong VND, or Zimbabwean dollars ZWL, these currencies are now subject to tighter controls. Central banks are increasing security, updating monetary systems, and coordinating with financial institutions to fight fraud, money laundering, and counterfeit risk. This means banks are under pressure to comply, and some simply aren't equipped for these exchanges anymore. Not speculation, strategy. Many note holders mistake rejection for conspiracy. But the truth is usually more practical. Banks are rejecting currencies due to outdated notes, lack of system integration, or compliance shortfalls, not hidden agendas. For example, old IQD bills printed before 2003 are no longer legal tender and are automatically denied. Outdated VND paper notes have been replaced by modern polymer ones. ZWL bearer checks from the hyperinflation era are no longer recognized as currency but as historical collectibles. Simultaneously, banks are required to enforce stringent KYC, Know Your Customer, and AML, anti-money laundering, rules. Without strong compliance frameworks or direct partnerships with the issuing central banks, like Iraq's CBI, Vietnam's SBV, or Zimbabwe's RBZ, many banks will decline to process your request. Step 1. Authenticate your currency. Before jumping to conclusions, take a moment to verify your currency. Inspect your notes carefully for watermarks, security threads, microtext, serial number accuracy, condition crispness, clarity, no tears or fading. Use tools like PMG, Paper Money Guarantee, or PCGS Currency to professionally certify your holdings. These services offer not just validation, but certification that significantly increases your credibility with banks and redemption centers. Step 2. Understand bank policies. It's essential to understand that not all branches are equal. A local teller might have no authority to process exotic currency, even if the institution's wealth management or private banking division does. Ask precise, targeted questions like, is your bank currently processing IQD or VND? Do you have direct channels with Iraq's CBI or Vietnam's SBV? Do you recognize certified notes from PMG or PCGS? And always request written documentation of the bank's foreign exchange policy. It could be the difference between a closed door and a future opportunity. Step 3. Explore redemption alternatives. If your local bank won't process your notes, even after authentication, look to specialized institutions and private financial networks. In 2025, major players like Chase Private Client, Wells Fargo Wealth, and TD's foreign currency desks handle high-level redemptions, often requiring prior vetting and significant assets under management. Outside the traditional banking sphere, a growing number of professional currency redemption centers operate in major U.S. cities. These aren't walk-in services. You'll need documentation, identification, and likely an appointment. Many are in direct contact with foreign central banks for real-time validation. Search for terms like CBI-affiliated IQD redemption centers, VND Exchange Appointment 2025 USA. Building a relationship with these institutions now can give you a significant advantage when the time comes. Step 4. Master the paper trail. Even if your currency is real and your exchange institution is ready, your documentation must be flawless. Prepare purchase receipts or proof of acquisition, government-issued ID, passport, driver's license, social security number or tax ID for IRS compliance, currency holder declaration forms, notarized affidavits for redemptions over $10,000, Acknowledgement of risk, especially for ZWL. Institutions today are more cautious than ever. Your paperwork isn't a formality, it's a requirement. Step 5. Consider licensed brokers and private networks. If banks aren't an option, licensed brokers and compliance-certified dealers may be your best bet. Many operate under FinCEN or state money transmitter licenses, MTLs, and are equipped to offer competitive rates while handling the compliance side of things for you. Other alternatives include airport and border exchange kiosks, limited use, lower rates. Private collectors or currency clubs, risky, requires caution and proof of legitimacy. Redemption agreements, legal contracts with vetted intermediaries offering structured payout terms based on proper verification. Whatever you choose, make sure your path is legal, traceable, and fully transparent. A larger financial shift is underway. Globally, we're seeing foundational changes in how currencies and trade systems function. Iraq's recent adoption of IMF Article 8, Vietnam's CBDC trials, and Zimbabwe's gold-backed digital asset programs signal a shift toward modernization and international integration. These are not isolated developments. The IMF, BRICS, and G20 are all moving toward asset-backed frameworks, diversified trade settlement tools, and reduced dependence on a single fiat standard. As noted by economist Jared Brooks, by 2026 we may see a broader realignment in global currency dynamics, with the IQD, VND, and ZWL playing legitimate roles in trade and reserve diversification. Rejection equals redirection. Hearing, "We don't accept these notes," in 2025 may sting, but it's often the start of a more informed path forward. Rejection is not the end of the road, it's a signal to elevate your strategy. You are not just an investor in a speculative asset. You are part of a larger, strategic shift toward a new financial paradigm. Success in this space depends not on luck, but on preparation, research, execution, and compliance. Those who understand and align with the evolving structure of global finance are the ones who will be best positioned when the monetary reset fully unfolds. Stay informed, stay compliant, stay ready. Like and subscribe for more videos.